Hello, everyone, and welcome to the Gold and Silver Club end of week review for the 25th of July 2014, presented by myself, Phil Carr, and Nick Kalsi at the Gold and Silver Club. Today, we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will be covering an end of week summary for the commodities markets. We'll be looking at the top trades of the week. We'll cover live market commentary and technical analysis. We'll look at the week ahead, so the key events looking forward. And of course, we'll be covering any questions you may have. So gold price this week, we've seen gold rise from 4 week lows on Chinese data and geopolitical events. Gold price rose from a 4-week low on Friday, supported by better than expected economic data in Asia, tensions in the Ukraine and Middle East. Gold price ended the US trading session at a 4-week low as a firmer US dollar put downside pressure on the precious metals. Gold price slipped on the initial jobless report, which showed the number of individuals filing initial jobless benefits in the week ending July 18th declined by 19,000 to 284,000, the lowest level since February 2006. This is an important early indicator ahead of next Friday's non-farm payroll report, potentially signalling another month of healthy job gains. Over in Asia, the highly anticipated Hsbc Chinese manufacturing purchases index PMI rose to 52 in July compared to a final reading of 57 in June. A PMI reading above 50 suggests expansion. The key economic data suggests the world's second biggest economy is picking up momentum after a slow start to the year. So this helped lift the precious metal prices from 4-week lows. Elsewhere in the commodities markets, oil prices rose for a fourth straight week as the US Energy Information Administration, the EIA report on Wednesday, showed commercial stockpiles for crude oil shrank by 3.97 million barrels to 371 million barrels last week. So the reduction marked the fourth consecutive weekly decline in reserves and the lowest total level since March 2014. And this presented commodity traders with lucrative buying opportunities, as highlighted in our top trades of the week. So we shall take a look at those very shortly. Before we do so, I am Phil Carr, professional trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, agricultural commodities. I've also trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. And I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speaker at numerous training seminars, webinars, and workshops. Joining me in running the Gold and Silver Club is Nick Kalsi, professional trader, investment analyst, and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, spent several years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset, and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications. We've appeared frequently on financial television. So let's just take a look at the gold price at the moment. Currently, we are getting a bit of a lift this morning. We're currently trading at $1,293.84 US dollars an ounce. So we'll take a look at the technical charts very shortly. Before we do so, we'll have a look at our top trades of the week using the Gold and Silver Club signature trading strategies. So first of all, natural gas. We had a lovely sell short on this earlier on in the week. The risk on this was 60 points, so $600 for each lot, traded for a profit of 180 points, so 1,800 US dollars. Profit for a 3-to-1 risk to reward, so 170 points profit from a lovely breakdown in price. Platinum, we also saw a nice sell-off this week, which we managed to catch, which was a risk of 70 points, so 700 US dollars for each lot, traded for a profit of 210 points, so $2,100 profit for a 3-to-1 on platinum. And we also had a lovely breakout trade on WTI crude oil this week for 110 points profit. So the risk on that trade was 40 points, so 400 US dollars risk for each lot, traded for 110 points profit, so $1,100 for each lot, traded for a 2.5-to-1 risk to reward. Okay, so let's just take a look at the technicals and how they're lining up at the moment. First off, I would like us to take a look at the US dollar index. You can see the US dollar index just breaking out this morning. We've actually broken above the 81 mark, which is quite important. We've got a nice V-shaped reversal pattern on the daily here. We've broken above the neckline of that. We could get higher prices here on the USD. You can see really that was a key level of resistance for us to break. We did get some pressure put on gold yesterday. We came down as low as 1287, which was a very key support area, actually. You'll see the 200-day moving average is around that key level. And we did find some key support. We'll take a look at gold very shortly. However, gold is getting quite a lot of safe haven support at the moment as well. So gold definitely one to watch. It's had quite a good value area at the moment. We'll take a look at that. But the US dollar index has popped up above key resistance here, and we could see some higher prices for the US dollar, but it may not put as much pressure on gold as you would normally expect due to safe haven buying at the moment, or certainly safe haven support. So I'd be looking at the next key level for the US dollar index to break out to would be around the 81.32, which is the pivot highs going back to earlier on this year in January 2014, December 2013. Above that, we'll be looking, really the 81.50 level will be a key psychological resistance level anyway. So we could pop up anywhere in the region of 30 to 50 points higher here on the US dollar index. So US dollar index has done well this week, had a very strong week, put some pressure on the metals, although the metals are being supported by safe haven buying at the moment. So with that, let's take a look at gold actually. So gold, we can see we bounced off the 1287 level here. We did discuss this on previous analysis. This 1287 being a very key level for gold to hold. It is where the 200 MA holds. We've also got some quite a lot of indicators all forming a key support level around that. We're just looking at a raw chart at the moment, but there are a lot of key supportive areas, Fibonacci's and weekly pivots just around this key level at 1287, which are holding the price at the moment. So I'll be looking at this as a potential buy zone here for gold. I'd like to see how gold is going to close this week, whether we are going to get a nice bounce. We're at 1294 this morning, so we can definitely see gold is getting some buying. If I just drop it down into a tighter time frame, you can see we're just getting a little bit of a lift this morning. We are starting to break above. We've got a little bit of resistance here. If we just get a pop back above 1295 here, we could get a nice move back up to the 1300s and above. So you can see this is starting to develop a nice little wedge. And if we can get a nice pop up higher here above the 1295 level, we could see a pop up to 1300. So again, very interested to see how gold is going to close this week. If we can get back above the 1300s, this could represent quite a decent buy zone for gold at the moment. We have got some major news next week, which I'll go into towards the end of this webinar. But for the time being, we are holding support around 1287 on gold. And I would say it's definitely one to watch. That is a key support zone. That's the key level that we broke out from as well from the FOMC announcement in June. And we appear to be holding support at this level for the time being. If we move over to the oils, I like WTI crude oil this week. It's been very much a consolidation pattern on oil, but we have had some really nice buy opportunities as the price is just tending to ricochet between support and resistance here. So you can see key support that we've come up to again just this morning, 101.78. So this is a buy zone at the moment for WTI crude oil. You can see previously we've had some bounces around this level at the 101.78. So we're looking to see whether we will be able to get a bounce and come back up to the resistance zone again, which will represent circa about 150 point move. So do look out for that. It's a pretty good risk to reward at the moment for a move above. We've already triggered actually, but a move above the 102 level here. We can build up some momentum today. We should get a nice pop up higher, back up certainly to the mid range of this channel, and we could even get a move up to the upper end of this resistance channel. If we zoom out a little bit here, you can see we did get that capitulation going back to the 98 level. If I just zoom out on the daily as well, that was the capitulation that we had at 98.66. That was a very key level for WTI crude oil. You can see this is the V-shaped reversal, which we are starting to form at the moment. So we've got the neckline above at 103.33, getting supported here as well at the 101.78. So we're more on the side of the bulls at the moment with regard to oil. If you zoom out on the chart, we are overall still in quite a strong upward trending channel. So I'll be looking for more upside here on oil at the moment. I think we could have quite a nice buy on WTI. So do look out for that today on oil. Could represent about 100 to 150 point breakout to the upside. If we take a look at Brent Crude Oil also had a capitulation as we discussed last week. Again, just looking at the raw charts, you can get a lot of data just from the raw chart here as well. We did get a bounce off the 105.50 level last week. This was a key level of support just going back in the chart to 2013 earlier on in 2014. We've got a key level of resistance the market couldn't break at the 108.58 level. We're just consolidating between support and resistance at the moment. So I'd like to see which way this is going to break. WTI looking stronger at the moment, but if we just have a look and let's see, we'll just draw the consolidation zone at the moment. So here's our consolidation that we got on Brent at the moment. So you can see key support. In fact, I'll draw that as a horizontal. You'll be able to see it a little bit more clearly. So key support, 106.70, key resistance, 108.58. And what we're tending to do at the moment is just come up to resistance, sell off again, come back down to support. So the longer this market stays, Brent Crude Oil, in this consolidation zone, the more likely we are to get a volatile break once it does break out. So we're very interested for a break of 106.70 for a short, or a break of 109.58 for a long. But in the meantime, there are opportunities to buy and sell within this range as well. We've got a circa about a 200 point consolidation zone at the moment on Brent. So oil, very nice tradable market this week for day trades, and then we'll be looking for a breakout or a breakdown of this market very soon. So do keep an eye on Brent. I think we could get some good volatility on this today. I think WTI represents the better buy right now. You can see a nice little hammer developing on the daily as well. And also keep an eye on Brent to see which way we're going to break. Natural gas, we've been continuing to break down. We've ridden this down, really, the major downward trend since we broke through this neckline at 4.327. We've had some really nice sell shorts. You're tending to just break down, consolidate, break down, consolidate. We broke down again this week. You can see yesterday we got a bit of a spike on the natural gas storage inventories. We've got lower volumes today so far. So interested to see if Nat Gas wants to make an attempt to retest previous support here as a new resistance. It needs to get back above 3.888 in order to have any sort of a chance of doing that. Otherwise, what I suspect the market will do is come up, test this previous resistance and just sell off again in line with the overall trend. And we'll be looking to position ourselves for sell short opportunities with a very good risk to reward, just to take the market for natural gas lower again. So do keep an eye out for that. That is the ideal trading opportunity, to just trade just in line with the overall downward trend. Nice risk to reward on that. And we can sell short with natural gas. So look out for that. Now, silver did get a pop lower yesterday. Most of the metals were quite weak yesterday, actually. If we go back to gold, gold is starting to gain a little bit of momentum here to the upside. We can see coming up to 12. We're just about, we're right at that resistance at 12.94.64 right now. Let's just take this off. Looks like we're going to actually move higher here. There we go, just about breaking up now, 12.95. So we're getting a nice little lift on gold at the moment. We've got about 3 hours here till the US session. So we see if the US session buys as well. Yeah, I definitely would keep an eye on gold this morning. If you look on the daily here, we're getting nice support. So this 12.87 was a very key buy zone. It was a very key level for gold to hold. So we'll see if gold can hold on to that today. The US dollar index starting to sell off just a little bit, nothing major, but we're getting a little bit of pressure here on the US dollar index. You can see this inverse hammer just developing at the moment. So keep an eye on that today. I think gold could be a good value trade at the moment. We've sold off quite significantly. I know a lot of traders are looking to position themselves for longs at the moment, particularly given the safe haven buys with the fundamentals we discussed at the beginning of the webinar. Okay, so let's move over to platinum and palladium too. So palladium still managing to climb higher here. We've had a further breakout to the upside, come right up to the upper end of this resistance channel. You can see how clear this channel is with palladium. Very clear upward trending channel. You don't need a lot of indicators here to see this as a very clear upward trending market. although the indicators that we use at the Gold and Silver Club will give you your day trade entries and exits, which you do need. So you've got this upward trending resistance channel. We've come up, we've hit that again, broken out here to 13-year highs. We've got a consolidation at the moment. You can see there is a little bit of a trend channel forming as well, just on the tighter timeframes here. And we are getting supported at the moment. Palladium, a lot of traders looking to get into Palladium long here for further breakouts. If we can get a break again above the resistance, we'll break out to 13-year highs, above a break above $887 per ounce. We'll be looking at the $900 per ounce as the next key level of resistance. If we break lower here, you've got next key support will be previous resistance at 862.56, and then we'll just be looking for a pop to the lower end of the trend channel here, and then we'll be looking to enter. Unless this trend channel breaks, we'll be looking for another entry back up to the higher end of the trend channel again to have a nice pullback and springboard for a long-term swing trade here for Palladium for a move back to the upper end of this resistance channel. So do keep an eye on Palladium. At the moment, is representing some a good potential buy opportunity right now. If we look at platinum, platinum did break down a bit yesterday. Platinum was a little bit weaker than the other metals. We've had a nice pullback. We're getting a bit of support just this morning here as well. We'll see what we do in terms of platinum here, whether it can hold support. We've been in a very strong upward trending channel in platinum for most of 2014 here. So this may be treated as a buy opportunity here with platinum at the moment. So we'll be keeping an eye on that to see whether this does represent a buy opportunity at the moment. You can see as well, we've got a nice trending channel on platinum too. So we'll just be waiting for a buy signal here. So on the daily at the moment, we're getting supported. We didn't break lower than 1460. So if we do get a buy signal, we could be in for another nice push higher here. I'll be looking for correlations with palladium, copper, and gold as well for a platinum. If we look at copper did start to break down. This is what I'm looking for in terms of a move on gold next. We did get a pullback on copper, which reached the upper end of its resistance channel. We pulled back, nothing major really, came back to 33.166 support zone here. Nice break up high the last couple of days, and this could lead us higher with gold. In fact, gold, I would say watch gold at the moment. You can see actually on the 4 hour, we are starting to break higher here, already back up to 1295. Look for a pop up to 1300. Gold, definitely one to watch today. Okay, so keep an eye on gold and the oils as well. Right, okay, so just the other markets to cover here are the softs. So we are just staying with the overall trend really here on the softs. We're looking to break down from this support zone. We got a nice pop up yesterday, which gave us a better entry to sell short. Very strong downward trending channel here on the softs at the moment. Looking to break down 520 for another sell short opportunity. You can see very strong downward trending channel that we've been on both wheat and corn since May. And we did take out this major support zone that we discussed on previous webinars at the 550 level. And we'll be looking now to just break down from the 520 coming down to the 505 and 500 zone on wheat. So we're just staying within the overall trend channel. The trend is definitely your friend on the grains at the moment. If you take a look at corn as well, corn continuing to break lower. Corn, of course, broke through major support at the 406 level. Since we broke through that support, which we discussed on previous webinars, we've moved it circa about 500 points. And what you'll see here on corn and wheat is we'll break down, we'll consolidate, we'll break down, we'll consolidate and break down. So the trend really is your friend. A break below 355 here will signify further downward pressure. Ultimately, we'd like to see a nice move down to the 300 level for psychological support zone. But that would represent a lovely sell short here. We'd be looking in the region of about another 500 points. So I'm just waiting for another break of support, 355 key level of support to break. And then we'll be looking to get a lovely sell here for another break lower from 355. Okay, so definitely corn and wheat, we will remain short for the time being. There's been a lot of day trade opportunities on that as well. Okay, so right, just going back to a couple of questions here. Chris Honduras, so you're just asking, has there been a bottom on the daily chart at the moment on gold? Well, gold has certainly been supported. We're on a raw chart at the moment, but a lot of the Gold and Silver Club indicators do show this is a major support zone. That was a very important level to hold, Chris, yesterday, the 1287. It's where we've got some key moving averages. There's a lot of key indicators are all showing that that was an event area for gold. If it broke it, we could have been seeing quite a lot of downward pressure on gold, but it did hold around the 1287 level. We've got some important news announcements next week. We've got the FOMC on Wednesday, non-farm payroll on Friday, which should give us some good volatility next week on gold. But so far, it's looking good for gold to support 1287. If we have a look on gold at the moment, and we just actually, in terms of next week as well, if we have a look on gold at the moment, we've still got some work to do to break out of this short-term downward trend that we've got. So we've got a little bit of a short-term downward trend, which is starting to form on gold, which we do need to break out of. However, what you want to turn your eye to here is to have a look at copper and what copper did. So we had a very similar downward trend on copper, which broke out to the upside. Now, copper is a very I'd say key correlation to gold. So you want to keep an eye on what copper's doing when you are trading gold, because this could lead gold to a very similar move as well to the upside. So you really want to see whether we can close above the 1300. So gold at the moment, yes, we're getting a lift at the moment. For those of you who day trade, there is a nice opportunity for a buy currently. In terms of an overall swing trade at the moment, for a longer term trade as we go into next week and we go into August, we just need to break out of this downward trending resistance channel. We'll certainly be in a good position to review this further next week as well on next Friday's webinar. And do make sure you subscribe to our weekly newsletter. You'll get further analysis on this gold move. But we need to see where gold's going to close today. Okay. Right. So with that, let's look at the key news announcements as we go into next week as well. Okay. So the next week's key announcements we need to look out for. We've got Monday, the 28th of July at 3 p.m. BST, 10 a.m. Eastern time. We have the US pending home sales. So the National Association of Realtors pending home sales report measures the change in the number of homes under contract to be sold, but still awaiting the closing transaction, excluding new construction. So a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Next Tuesday, the 29th of July at 3 p.m. BST, 10 a.m. Eastern time, we have the US consumer confidence. So consumer confidence measures the level in consumer confidence in economic activity. It's a leading indicator as it can predict consumer spending, which plays a major role in overall economic activity. A higher reading can point to higher consumer optimism. So a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Next Wednesday, the 30th of July at 1:30 p.m. BST, 8:30 a.m. Eastern time, we have the US GDP. So the gross domestic product measures the annualized change in the inflation adjusted value of all goods and services produced by the economy. It is the broadest measure of economic activity and the primary indicator of the economy's health. A higher reading indicates bullish for the US dollar, while a lower than expected reading indicates bearish for the US dollar. And look at that for the inverse correlation with gold and silver. Additional news announcements we have which will affect the commodities as we go into next week. We have at 3:30 p.m. BST, 10:30 a.m. Eastern time, we have the US crude oil inventories. So the data reports the number of barrels of crude oil commercial firms have in their inventory. Commercial firms, of course, report those inventory levels for the Energy Information Administration on a weekly basis. A higher than expected reading should be taken as bearish for crude oil prices, while a lower than expected reading should be taken as bullish. Thursday, the 31st of July at 1:30 p.m. BST, 8:30 a.m. Eastern time, we have US initial jobless claims. That data measures the number of individuals who filed for unemployment insurance for the first time during the past weeks. That is the earliest US economic data. Week-to-week numbers, of course, can be volatile. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish, which will inversely affect gold and silver. And then finally, on Thursday, the 31st of July at 3:30 p.m. BST, 10:30 a.m. Eastern time, we have the US natural gas storage report. So the Energy Information Administration, the EIA natural gas storage report, they measure the change in the number of cubic feet of natural gas held in underground storage during the past week. A higher than expected reading should be taken as bearish for natural gas, while a lower than expected reading should be taken as bullish. And that will, of course, affect your natural gas trades. A great announcement for you to trade every week on natural gas. So those are the 6 announcements we need to really pay a lot of attention to as we go into next week. And of course, for those of you who would like to find out more about how to join the Gold and Silver Club live trading room program and daily trade calls at the Gold and Silver Club, you can very simply go to www.jointhegoldandsilverclub.com. You can also contact us at our London, our New York, our Johannesburg, our Budapest or Hong Kong offices. I'll leave this details on the screen for you so you can get in touch. And of course, make sure you subscribe to us on our newsletter, just very simply, www.thegoldandsilverclub. You'll receive free weekly reports on the precious metals, energies, agriculture, live market analysis and prices. So do make sure you subscribe to our newsletter as well. Okay, that is it for today, guys. So with that, do get in touch if you'd like to get more information on the live trading room or daily trade calls. Wish you good luck for today's trading. Have a great weekend, and we'll definitely see you back here same time next week. Okay, so take care, everyone, and we shall see you on the next one. And thanks to FX Street and the team for putting on today's webinar. Take care, everyone. We'll see you on the next one. Bye-bye.